Many of you know Colin from the Daily Trader. Colin also has a trading room called the Forex Room that he trades in with some of his buddies. And he's been trading a long time. I've known Colin for a long time. He was trading before I met him, but he's one of my favorite traders. He's one of my favorite people. He's an all-around great guy. So his trading has really taken off over the last, say, 4 or 5 years. And what's so great about that is that he's always willing to share his experiences with everybody. So you can ask him questions. He's, in the Daily Trader, you have great access to him, or in his trading room, you have great access to him. But what's great about him is he knows what it's like, guys, to be frustrated with your trading, like I do. He knows what it's like to be in that situation where maybe things aren't going as well. I remember as a trader being just overwhelmed and so joyous when I became a break-even trader. And Colin's gone way beyond that. So today he's going to show us his trifecta trading system. He's going to show you how he finds trades with this system, what the rules are for this system, and you'll see exactly how it works. So I would love to see what this is all about, Colin. So let's go ahead and get started. Thanks so much, Colin, for spending time here with us today. I really appreciate it.
Hi, Walter. Thanks for that wonderful introduction. Wanted to actually just say hello to everybody, and thanks for being here with us. Today we're going to talk about the trifecta system that actually I've just introduced into our live trading room on Monday. And I liked what you had to say about covering struggling when sometimes things don't go your way, because to be perfectly honest, I got myself into a bit of a rut this month, and I believe it was a psychological test is what it was, and finally we've broke out of that. And I think that's because the markets have actually broke out as well. So, so it's definitely a challenge being a trader. But what the main thing we need to focus on is that we stick to what we know. And we adapt, and we trade what we see, and that's what the trifecta system has been helping us do as well. So, without further ado, I'll just move on a little bit. I think some of you have already, some of you that know me know that our team at the Forex Room, there's myself, my good friend Greg Ward, and Hazefa Hamid, who actually is going to be joining the room pretty soon, a couple of days a week. He's actually been doing most of the background for us, but now he's going to be stepping in. And Hazefa is a pure naked trader in every sense of the word, and his favorite setup is also the kangaroo tail. So I thought that was pretty interesting, and a lot of the people that are familiar with Walter's setups know the kangaroo tail or the pin bar very well, and it's also actually my favorite setup. So and then we have 2 sessions for our live trading room. One's the London and one's the New York session, 4 days a week. We take we take Friday off. Sorry, people. But and so let's move on. So trifecta is actually it's a pretty simple system for the most part. The big advantage to trifecta that I've seen is that it tells you basically how long to stay in the trade once you're in it. So in trifecta, we have 3 things coming together. We have market movement, which tends to happen in waves of 3. Some people call them ABC. Some people call them Elliott wave. Depending on what you call it, it's just basically a 3-cycle system that I see. And usually when we get a 3rd wave, that's considered a complete wave, and we're probably looking at a reversal from that point. So combining just a simple indicator with the stochastic and price action we pick our entry points and then hold it until we get a complete wave. So in the last, in April, we've actually seen in, actually this wasn't on my live account in April, but in my demo account, my testing account in April, which I do use for live money as well, I got a couple of trades that went 10 to 1. So it's pretty amazing if you can hang on to it. But trust me, I'm like a lot of people. It's very difficult to hang on to a trade to go that long. It's very tempting to just take profit. So let's just go over the rules real quick. First of all, what we're looking for a 3 to print, and I'll show you the screen in just a minute. But we're looking for a 3 to print with a pin bar and or a color change candle. So a pin bar, a big shadow or an engulfing pattern, or an inside bar, for example. So the entry for pin bars is the open of the next candle, which is a pretty standard method of entering on pin bars. Entry for the color change is the close of the color change. So if we have a big blue candle and then we get a small red candle, we actually go short at the open or close of that color change candle. And then we're looking for a stochastic to be above 80 or below 20 with just standard settings, and basically that's kind of confirmation that the move is potentially exhausted. And then we basically, the plan is to hold until we get a reversal with all the same criteria. So here we have a setup. I actually took this setup. This is the Euro Yen. I took this trade on, I believe it was Tuesday, and this is the entry. You can see my dotted line there. I'm going along just above this, I guess it would be an inverse hangman, I guess it would be called. But that's where I've put my entry. I've got my stop loss down here, and I didn't have a target set at this point. And as you can see down here, we've got the stochastic well below 20, but it hasn't crossed yet. Now, the next one is just a bigger picture. So you can see we've got our 3, we've got a below the 20, and we've got our entry set. Here we go. We're in the trade. We're up 13 pips at this point. And then finally, we took profit. I took profit here when the stochastic reached the overbought again above 80, and that actually ended up being a 4 to 1 trade. This actually did continue higher, but I closed it at the weekly pivot at 4 to 1. So it's a pretty simple system, but you know, the idea is that instead of closing it here, we actually wait through the pullback and we continue on to the next move till it gives us a 3 that says that the upward trend is over. And if you'd like, I can show you some live charts at this point and take any questions. And what I'd like to do just before we move on with the live charts is I want people to try this system out, and we'd really like for people to test it out and give us feedback. And so because of that, I've got a special offer for everybody. The first 10 people to email me, trifecta@theforexroom.com, I'll send you the template and the indicator for free. And then I would love it if you would try it out and you know, give us some real-time feedback, whether it's trading your demo account or your live account. It's completely up to you. But so for the first 10 people to email me at that email address, I'll send you the template and the indicator absolutely free. No strings attached other than just a little feedback. So with that, that pretty much wraps up the slideshow part, and if you would like to, we can go to the live charts now and take some questions.
So that's really interesting, Colin. So how many of these do you usually take in a given week? How many do you find?
Well, it depends on the time frame. I've actually really been liking trading them on the 4-hour and the 1-hour time frame, and so I'll actually put up the pound USD chart up. This is what I was testing the system on. This is the euro, as a matter of fact, the live euro chart, and you can see this is the trade we took off of the daily pin bar, which also happened to be a completion, a three-wave. So that added to the beautiful pin bar and divergence that we had there, which I believe Walter also has a system called Ghost Peaks and Valleys that I just learned of today, as a matter of fact. So I've actually got a long on here right now, even though we're in a really strong downtrend. We had a perfect pin bar form here. We had a 3. We were under the 20 line, way under. And I think this could actually keep going down, but I'm just looking for a simple 1-to-1 trade or maybe a 2-to-1 trade out of this for now. But let's have a look at the pound USD, and we'll go to a 1-hour chart. And we can see the number of setups here that have occurred over the last few weeks. So if we go back to, let's go back to about the middle of the month, for example, just for frame of reference. And you can see that often this will tell you when to get in, even though you don't really have a pattern or a candle or something to tell you to get in. But when you add the criteria up, so we had a downtrend, we had a nice big down candle, we had a blue color change candle, which just happened to be basically an inverted hangman, and then you know, the entry basically becomes the close of this candle. So right here, put our stop down here somewhere. I usually use about a 20 pip stop just to be safe. So we have a 20 pip stop down here, and you stay in the trade even through this back and forth until this candle right here. So that was 86 pips before the next 3 printed with a color change. And then basically you go short. So you go short at that point until the next 3 prints with a color change, which might have been right here, as a matter of fact, because sometimes we do get you know, an extended wave, a color change, and then it falls just a little bit more. So there, you do have to be a little bit careful, especially in a strong downtrend or a strong uptrend. Just when you think it's going to reverse, sometimes it'll go just a little bit farther. And so out of the pound USD 1-hour chart, I'll just sum things up here. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 setups out of it now. So it can be quite lucrative when your average stop is 20 to 30 pips and your average gain is about 3-to-1.
Yeah, that sounds great. So can I ask a quick question here?
Yes.
What is the exit? Is it the stochastic, or is it a third wave, or what? How do I know when to get out, I guess, is my question.
That's basically what we look for to get out is, that's an excellent question, is we look for all the rules that we took for an entry to reverse. So if we have a entry here, for example, and we go short at the low of this candle here, we're above the 80 for the stochastic, and we've got a 3 print with a color change, and then we look for the same thing to happen on the other end. So over here we've got a 3 print, we were below the 20 line on the stochastic, and then we got a color change. And that's your signal to get out. So if you entered here and you got out here, that time you would have made maybe 23 points. but that's at least 1-to-1. Oh yeah, that would have been close to 1-to-1 anyway. So that's your exit criteria. So if this is your next entry, for example, right here, you stay in until this one right here, where your stochastic is well above the 80. You get a color change candle in here somewhere, and that's your reversal to go short again.
Okay, so you get in and you get out at the 3. So Mark is asking, yeah, you get in on the third candle, or the candle that's marked with a 3 because it's the third wave, and then you get out when you see that as well. That makes sense.
That's right.
So you would have jumped out. Okay, so let's look at the one that's peaked out, the highest 3 on your chart right now.
Right here.
Right.
Yep.
So we don't get out on the 2, even though it's oversold on stochastic. We get out on 3 down lower, where it basically just printed recently, right?
That's right. Yeah.
I see. Got it. Does that make sense?
Yeah.
Al is asking if the 3s repaint. Great question, Al.
Yeah, that is actually, like I say, there are times when a 3 will print, for example, on this candle, or maybe this candle, but then it'll make a new low, and there comes a point where it won't repaint anymore, and that's something I'm actually working on. My programmer and I are kind of working on that to solidify that so that it won't change on us, so that we know for sure, okay, when this 3 prints, this is the end of this reversal, and we should be looking at either getting out or getting back in. But for now, that's one of the reasons that I'm offering it to the first 10 people, is we would love for people to test this in real time and give us some feedback.
Right, so yeah, right. So it basically depends on how many candles it counts around the peak or the valley, right? Like that's basically what. Like if it's 5 candles, it'll take, you know what I mean, before it's set, right? Or is that?
That's right.
Yeah. So yeah. And Robin wants to know if there is an alert for when the 3 prints. I'm thinking like a sound alert or an email alert might be what Robin's talking about.
No, we haven't programmed that in yet, but that is something that I have on the to-do list. I think it would be great if it just alerted you each time a 3 printed, because that is basically what you're waiting for, and especially if you're going to be away from the computer and you're trading higher time frames, it'd be great to have an email alert or something sent to you saying, hey, check this out.
Absolutely, I agree. Dave T wants to know about the moving average. Is it a 60 EMA? What's going on with that?
Oh, actually, the moving average, it just seems to end up on all my charts. It's a 62 moving average, and it really isn't relevant to this system. But for some reason, I just, out of habit, I think I put it on all of my charts. So.
Yeah, that's what I thought. Yeah. I thought that was the case, but I just wanted to make sure that I wasn't putting words in your mouth. Yeah. We've got lots of them here. Yeah. Okay. Mark has a great question here. Mark F is asking, are there any rules or guidelines for determining the end of a 3? And for example, should 1 and 3 be similar in length and time, relationships and price between 1, 2, and 3? So is it just sort of like a fractal, or is it actually like a time thing, or should there be about 10 candles between 1 and 2 and 2 and 3, that sort of thing?
It's actually derived from a complex, actually several moving averages on different time frames are used to calculate the numbers. So if you look at the code for it, it's actually pretty intense, because there's about, I think there's either 4 or 5 different moving averages that have to do certain things in the background in order for a number to print. So when you're in a range bound, for example, like right here is a good example. We've got 1, 2, 3, 4, 5, 6 number ones. These little green dots are number ones, and that's because the market is just going back and forth and not really going anywhere, and then we get kind of a spike, which suggests it should print a 2, and then a spike back the other way, so we've got some background crosses going on, and then finally we get some real movement and start the process all over again. But we don't quite reach that ultimate until we get up here.
Okay, cool. So Mark says you get in and out the 3. Yep, that's right. Is there an alert when the 3 prints? Robin asked. We know about that. That's possibly on the works. Warren asks, I guess the candle close time is pretty important. He's with Wacky Owanda. Well, Warren, I mean, the 1 hour charts are going to be the same for everyone unless you've got a really wacky broker. So that's okay. And you also like the 4 hour, right? Is that right, Colin? The 4 hour as well?
Yeah, I do. I like the 4 hour a lot. Just because 4 hour takes less management. Same with daily charts. I look for 1 hour setups, mostly during the peak market hours, and then the rest of it actually takes place. I do most of the rest of it on the 4 hour and daily charts. Like for example, like I was saying, the euro trade that I posted on the Daily Trader that hit our first target, by the way, that one also had the fact that it was a 3-level rise or trend completion, I guess you could say, going for it. So this euro trade now, even though we have targets set, 1-to-1, and I think it was 3-to-1 I set, I will probably stay in this now until a 3 prints in the other direction. And that could be back down here, it could be down here somewhere before that next one prints, but that will be my signal to take the trade off.
Okay, that makes sense. So Mark wants to look at the source code. Any chance the source code can be shared?
There's a possibility. Yeah, it's kind of an open project, to be honest. I really think it has a lot of potential, and that's why we're giving it away for the first 10 people. They can have a look at it. We've got a couple of programmers looking at it as well of our own, and you never know, a collaboration might come up with something really great out of it.
Yeah, I think Mark, if that's the Mark I'm thinking of, I think Mark would be an excellent person to do some work on this. If it's who I think it is, and I'm pretty sure, yeah, it is. Yeah, it's Mark. Yeah, I know this guy. Yeah, he's pretty good. Also, Matt is asking, and I have no idea what this means, but Matt's asking, what is your STO setting?
That's good. I'm right there with you, Walter. STO. I'm not sure what you mean either.
Oh, stochastic. Oh, stochastic. Sorry, it's stochastic. Okay, that makes sense.
Oh, stochastic. Actually, we were using a 5, 3, and 5, but I've changed that. Actually, I'm now using a 5, 3, 7. So this one is actually a little out of date. I'm finding the 5, 3, 7 is a little smoother.
Cool. That's what happens for me. That's what happens when I haven't, I don't look at that stuff. So it's hard for me to. Sorry, guys. I know MACD, right? I mean,
yeah.
But STO threw me off. Okay. What about Bill says, will the template always be on or primary applied to the 1 hour chart? Well, I think you've answered that. You like the 4 hour as well, right?
Yeah. It can be applied on any time frame. To be perfectly honest, let's have a look at a 15-minute chart real quick. So even on a 15-minute chart, I know one of the guys in our live room is trading, he likes to trade lower time frames, get in early and get out sooner and all that. And he's trading 15-minute charts, and he's doing quite well at it. So it can really be used, on whatever time frame you want to use it on. And I also know of another individual who's testing it, and he's only trading the Asian range on certain pairs on 15-minute charts, and he finds that he gets pretty good zigzags out of it, and tends to capture the top and the bottom throughout the Asian range several times. So it really depends on what you're more comfortable with. I happen to like the 1-hour charts during peak market hours, and then I fill in the gaps sort of thing, or take the longer term trades off of 4-hour and daily charts. Like this trade, for example, right now that we're in, this is a euro trade. This trade, the short trade, was entered off of the daily chart right here with a target of 30.50, which we reached. And now on the lower time frame, on the 1-hour, I'm testing a just a 1-to-1 long or something out of that while staying short in the big picture.
Yeah, right. That makes sense. Just while you brought it up here, do you prefer to trade? Because I remember the last webinar, Colin, and you were talking about, you noticed that most of your trades were like on the pound and the euro, I think. Is this a system that you would say that you mostly trade on the euro and the pound, or are you willing to, 4-hour and 1-hour, or are you willing to go ahead and say that you'll trade on the Singapore, New Zealand as well?
I've traded on just about anything. Here's another live trade, for example. This is the Aussie US dollar, and I took this trade. We took this trade in our live room today. Kind of freaked a few people out because the euro and the pound was crashing like crazy, and we're going long on the Aussie. But it met all the criteria, and so we had a 30 pip stop, and our first target was 30 pips. And so this is off of the 4-hour chart on the Aussie US dollar. So I don't feel that I have to trade it on the pound, or I have to trade it on the euro, for example. It works on all time frames and on all pairs, and it really just depends on what the trader prefers. Like the returns that this potentially sees on the 1-hour, once you get good at this method, you probably won't need to trade any other pair if you can trade the 1-hour charts.
That makes perfect sense. That makes perfect sense. So let me ask you something. Because the rules, can we look at, just to solidify this in the minds of everyone, is it possible to pull up a chart that, I know you like the 1-hour and the 4-hour, but is it possible to pull up a chart where you can find a setup maybe brewing? So it might take a little bit of digging, and just so we see it as a setup, will look like.
Actually,
there you go, right there.
This is one right. This is one right now on the pound US dollar daily chart. The candle hasn't closed yet, and the daily chart, if we just go a nice clean template and get rid of these lines so you can actually see. So we do have a bit of a pin bar here on the pound, although it's not a great one in my opinion. I would have liked to have seen it print a little bit higher. Longer wick would have been nice, but it does technically qualify. But that alone, I wasn't really necessarily ready to trade that like I was the euro. And so that if we throw the template back on here, here we go. If we put the template back on there, we can see that we had a 3 there suggesting that the move up was coming to an end. And so we went ahead and placed a trade on this today on the daily time frame, even though this candle hadn't closed to give us a color change yet. So that is basically a live developing trade, and if this candle closes down or closes red, then that will confirm that this is actually a proper setup.
Yeah, right. So if today we close today in about 4.5 hours, something like that. No, 3.5 hours, I think.
Yep.
Should be. Yep. So 3.5 hours that daily candle will close, and if it closes red like that, then you're
Yep.
good to go, and you'd put your stop above that high on the 3, right? Above
Yep.
yesterday's
Yep.
high, basically. Yeah.
Yep.
And you would just hold until you got another 3. Is that right?
Yes, that's exactly the idea. I've just gone ahead and put a target down here for now.
Yep.
And we did actually trade this on a lower time frame in the room, and I think we got 64 pips out of it already, or something like that. So here's our stop loss, 116 pips, and I've set my target at 490 right now. If we look at the, let's see, what did we take that on? Yeah, here we go. So this was the trade we took in the room. It was actually we actually used a sell limit to take this trade today at these highs, and so we took this trade. I believe it was right here, and we went 60. Yeah, it was 64 right there. It was about 70 pips that we closed at, somewhere around there. And so, you can trade it on any time frame, just whatever you're the most comfortable with. Like right now, this was actually a really good setup here that I missed, and it's already gone 16, 17 pips off of about a 23 pip stop, but I'm already short on the daily time frame, and I've got a hedge position on the euro right now. So,
Right. I've got a question here from Warren, and he's asking if it's possible to test it in Forex Tester. These sorts of indicators can be converted. Warren, I have a guy that I use for this stuff. If you're interested. So, but of course, that would assume that you have the source code. So if we do, I mean, it's up to Colin obviously, but if he does release the source code, I could actually get it converted for you guys, and then you could test it. You know what I mean? So it's without having to live test it. You know what I mean? So, but you guys might also fiddle with it too, right? So there's a trade-off. Like if you guys decide, okay, we want to change it a little bit like this, you know what I mean? Then of course the Forex Tester version would have to be fiddled with too. But so it is possible, Warren, but we'd have to just work out the details on that. You know what I mean? So stay tuned. Colin and I will talk about that, and we'll see if we can do something like that for you guys. Okay? So yeah, no worries, Warren. Yeah. Possibly, I could also do the conversion, says Mark. Oh yeah, Mark in Tokyo is a brilliant programmer. So he could possibly also do the conversion as well. I'm sorry, Mark. I forgot about your skills, man. Yeah. But usually, I mean, I don't know if Colin from Portugal is here, but I think Colin had a similar sort of not similar, but like it's the style of indicator, and he wanted to use it in his trading. So we basically converted it into Forex Tester form so he could go back, because it was a kind of similar thing. You know what I mean, Colin, where you have this indicator, and I mean, it looks brilliant, of course, but you really need to test it and find out how good it's going to hold up. Yeah, exactly.
Yeah.
Yeah.
And that's where, I was using it just strictly on naked charts to begin with. But I found that, because it does repaint sometimes, I found that I needed something just a little bit extra to help me establish, to weed out some of the false signals, I guess you could say. And that's why I added the stochastic indicator.
That makes sense. Yeah. So let me ask you this: on this trade we have right here, Colin, on the pound, let's say that we
Yep.
get a red candle today, and we go in on the open tomorrow. Is that right? Is that the rules?
Yep.
Yep. Okay. So
Yeah,
you
as soon
don't.
as the candle closes, you would
Yeah.
actually enter short.
So that would be, let's say, so it closed at 5 p.m. New York time, I believe, for your chart. Um,
Yep.
so then we would go, okay, 5:01 p.m. we're in. We've got our stop up there at, I don't know, 56.29 or whatever it is, 56.30 or
Mm-hmm.
whatever that price is. And then let's say 24 hours later we get another 3, like it reprints. What do we do then? Do you know what I mean? Like what's the...
It would have to make a new high to repaint, I think,
So
and
it would probably stop us out then.
in that case, it would actually stop us out. Yeah.
Just take another...
Yeah.
Okay, what then actually...
Basically, you wait for a new confirmation to go short again.
Right, so you actually wouldn't go back-to-back days because let's say we go short at 5:01 p.m. today in New York, right? Because we get a red candle.
Yep.
So we go, and then let's say we get stopped out, all right? And then next week we actually would have to wait because we have a new 3. We'd actually have to wait one more candle, wouldn't we? So we wouldn't go back-to-back. We'd go, at the very most, we'd go one candle, we'd get in, we get stopped out on the next candle, and then we'd have to wait for the confirmation for another red candle. So we wouldn't actually go back-to-back.
That's right.
Yeah, right. That makes sense.
Yep.
I'm just trying to figure it out because other guys are asking the same questions here, which is what are the rules when you get a new 3 or you get stopped out? But that makes sense. You would, in general, you're going to be stopped out if the 3 moves, and then if it moves, you still have to wait for your confirmation candle to get in. So that makes sense. Okay.
So sometimes I've actually had a new 3 print because it made a high or low of maybe 1 pip and not been stopped out, and then I just stay in the trade, right? But yes, if you do get stopped out because it makes a new high or a new low, you revisit the original rules. We're waiting for that color change candle and all the other criteria to add up, and then you can just go ahead and get back in, because what this is saying is that this trend is coming to an end, and whether it's this candle or the next candle or the one after that, it's probably going to fall. So you might get stopped out occasionally and then get back in, but you're basically going to capture the bulk of the trend reversal if you just stick with the rules.
Yeah,
Does that make sense?
That makes perfect sense. Yep, that makes sense. Are there any other questions about this? This is really cool, guys. So do you guys have any other questions about this? What percentage of the 3s are false as Rashida? In other words, they move.
The higher the time frame you go, the less you're going to get false signals. I've noticed that on the low time frames, you'll get a few more false positives, I guess you call them. Even on the 1 hour, sometimes you will. But the nice thing about the 1 hour is that if you get stopped out and you wait for the rules again, it might be 2 hours later, but you're going to get back into that trade and more than make up for your loss.
Yeah, of course. That makes perfect sense. What about okay, James wants to know, is there a 3 right now on the pound 4-hour chart?
On the pound 4 hour. There was at the top, yeah. Right now we've only got a 1 down here at the low, so that means we're most likely going to see this pair trade a little bit higher and then fall again at least one more time, pull back and then fall one more time. So I would suspect that this pound is probably going to easily hit the first target.
Yeah, that candle that just printed looks pretty suspicious. Yeah. Yeah,
Yes.
I think.
Yeah.
I think.
And we do have, if you notice, we've got a lower high here than we did here, and we've got divergence on the stochastic as well, because we've got a lower high here, but the stochastics are roughly the same. So very good indications between the price action, the moving average, or sorry, the price action, the stochastic, and the completion of the trend that we're going to see this pair fall.
Yep, that makes sense. What about the times for this? Is it London and New York that you like to trade? Ask Jack.
Typically, yeah, because that's when our live trading room is open anyway. But you know, like there are just to be perfectly honest, there are so many setups. Like if you were to take all the 4-hour setups, I don't think you could actually. You'd have to have a pretty big account to take all the 4-hour setups that arise every day. Like, you know, if what I'm trying to do with this system is stick to, you know, the 6 or 8 most volatile pairs, the ones that move the most on an average in an average day. And the Aussie's a good one, the pound's a good one, the euro's a good one. Sort of, it's been pretty range bound until today, but you know, there's still lots of opportunities in there if you were to trade them on the 1 hour or the 4-hour time frame.
Right.
So if you know, basically the idea is you're going to trade less, but you're going to capture, you know, 80 to 90% of each trend, depending on whatever time frame you choose to trade it on.
Right. Yep. 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 Will you please show us the euros? Asks Bill. Bill, is it?
Sure.
Bill, are you talking about the 4-hour or the daily or 1 hour? I don't know what Bill wants to see, but I know he wants to see the euro.
Well, here's the euro. Here's the euro. This is a 1-hour chart that we're on here. You can see trade 1 is up 82 pips. That's the daily trade that we took in the daily trader, and that actually went down. It's already filled our first target at 30.50, and so now this, we're waiting for our next target down here. I think it's around 29, 28, something like that. And then on the 1 hour, we've actually got a valid setup here with a nice pin bar, and so I've actually taken a short-term long on this pair at the same time.
Right. So does everyone see how that works? So he's playing it both ways, based on a and you know, sometimes that actually, some people have a hard time wrapping their head around that, but it actually works out so, more than you would think. Like for me, instead of a 1 hour and a daily, I might have like a weekly sell on a pair, but then I get a daily buy. Well, what does that mean? What it usually means is that the daily will capture that short-term retracement move, and then the weekly is sort of the long-term, you know, 4 or 5 weeks from now where it's going to end up. And that's, so it can work, right? Yeah, it can definitely work.
Yeah. Especially in a move like we see here today. You know, this is a big move. I believe this was this was more than 100 pips from the high to the low, if I recall. Yeah, 180 pips. So you don't get a move like that in a day without some form of retracement. Very rarely do you not get a bit of a retracement, and so the way I'm playing it is that if I can get 30 pips, you know, 30 pips out of it and come back up here to these highs sort of thing, and then continue lower on the longer time frame, then why not do it?
Absolutely, I agree. Yeah. What about gold and silver? Asks Mark.
Okay.
Mark wants to know about gold and silver.
Have a look. So here's the gold daily chart, and you can see that we actually had a perfect gold setup down here. We had a big fall, and then we had a 3 print with a color change candle, and our stochastic was well into the oversold area. So this one here would have been still about a 500 pip stop, but so far we've only seen leg 1, and it's definitely gone 2 to 1 already. So this pair will most likely continue higher 2 more times. There'll be 2 more legs to the top side before we see a possible fall again. Now that said, we could actually fall down here and actually create a 2 down here, and then go up again. So there is actually room. It's kind of like Walter said, on the long term, you can remain long, and then if we were to get, you know, say a 4-hour sell, like we've got a 4-hour peak here, you know, you could ride it, say, back down to this level and still be long on the long term, on the higher time frame. So if we look at 1-hour gold, here we go. So 1-hour gold, this is today. We had a buy down here off the 1-hour chart. This was a 57 pip stop, and so far we have gone to 280 pips. Actually, this was yesterday, my mistake. And now we're getting, looks like a bullish pennant, so we'll probably see this come up here and complete with a 3 up here and then fall again.
Yep, that looks pretty. Pretty likely, given what we see there. Yeah.
Yeah.
Yep.
Yeah. Good old price action. You can tell.
You can see. Yeah. I mean those long tails. I mean, if I had to guess on that one, I'd say it's got a little bit further to go. So
Yeah.
I don't know what David's talking about, but David asks if this is the level 3 ZZ semaphore indicator on the on the threes, the 3 indicator that you're using here. He's asking if it's 3 ZZ semaphore. I don't know what that is, but it sounds pretty crazy to me.
I'm not sure either. I actually came across this through I don't know if anyone is aware of Steve Morrow's market maker method. A lot of his stuff is flamboyant marketing, but this indicator that was part of his course was actually given to me, and I've been playing around with the settings and stuff ever since then. So it wasn't called the 3ZZ or whatever when I got it anyway.
Right. So there you go, David. So that's where it came from Colin's point of view. I want to ask this question because he keeps asking it, and I keep forgetting. This is Bill. Wait. Yeah, Bill says again. Yeah, he asked this before, and I didn't get this one through. So the daily or the 4-hour trends are not a consideration as much as for the lower time charts, correct? So that's Bill's question. You look more at the trend on the lower time frame than you do on the daily or the 4-hour for these setups. Is that true, or would you not say that?
Yes. Yeah. Basically, what within a daily move, for example, within a daily move, you can have so many you have so much back and forth. Like the market rarely goes. The market rarely goes straight up or straight down on any time frame. So, for example, here's a 15-minute chart. Within this daily time frame, basically at the end of yesterday, there was a long signal on the 15-minute chart, and you got a sell signal today on the 15-minute chart. So, within that daily range, you don't really need to be too concerned with the overall trend if you're trading the lower time frame, because you simply trade what you see on that time frame.
Yep.
Basically, the idea is you're catching the swings within that daily range is what you're doing.
Yep, that makes perfect sense. There you go, Bill. Bill says he likes that. He likes that. Excellent. I'm glad that works for you, Bill. That's great. Frederick wants to know, hey, Frederick, great to see you here. I may have missed this, but does he add to positions, and how does he do it if he does? That's Frederick's question.
Okay. that is that's the good old pancaking theory. I do it, although I don't. As far as the 1 hour go, I haven't been focusing on it much lately. But let's take, for example, let's just scroll back on the Euro chart here. And I normally wouldn't. I haven't actually considered adding to my position using this method, but here's an example of how I would do it if I were going to add to position. So we had our original sell at this point, and then we created, these lows, and I use this indicator that we just use this indicator that we made to print these minor support and resistance zones, basically highs and lows, that print throughout the move, right? So if I were going to trade this, I wouldn't pancake my position until I was at 1-to-1. So here we got a 50 pip stop. 50 pips is right here, basically. So once I'm at break even, 1-to-1, my stop's at break even, I would look at each time a new low is established, I would look at adding to my position below that level. So in this instance, we would go 50 pips for the first one. We'd move our stop to break even. We would then add to our short here if we weren't trading this system, because with this system we're actually going to reverse our position and go long here. So we're not actually going to add to our short. We're going to close our short and go long. But that's basically how I would do it if I were to, if I was going to, pancake on a 1 hour time frame. If we look at a 15-minute, it's actually, you probably get a lot more opportunities to add on. Let's see if we get a nice, here's a good one. So for example, on the 15-minute chart, if we were to go long at this point, once we were at 1-to-1, so we got about a 10 pip stop on this one. Right here, we move our stop to break even. We could then add to our long at this position. At this position, at this position, at this position, and then finally you close them all when you get a reversal here.
Excellent.
Does that make sense?
Yeah, that makes perfect sense to me. Yeah, I hope that helps, Frederick. That makes perfect sense to me. Jeremy wants to know, does the 3 print at the close of the turning candle or the open of the very next candle? Or the does the 3 print at the close of the candle or the open of the candle?
The 3 prints when it can print at any time, basically. When the criteria for the 3 to print are met, it will print, and that could be halfway through the candle timeline. It could be right at the candle, as soon as the new high is made, for example. But in order for anything to be valid, regardless of the time frame you're on, you have to wait for the candle to close anyway. So until the candle closes, even if a 3 does print, it's not valid.
Yeah, that makes sense. Yeah, because if it makes like a new low, like the 3 on your chart right there on the Euro 15-minute chart, that made the lowest low, hasn't it? Right. So that would sort of get you rolling in the right direction because it's made that lowest low, right? So that could happen early in the candle, late, or whatever, but it's still with a big move like this, it probably happened the first time here. Exactly. Just because we had a big move down and then we had a color change right here. So you probably saw a 3 print here just because of the extent of the move. But again, like I was saying earlier, when the market moves at such a rapid rate, there's a good chance this when the market is trending the way it is, to me, would simply be a pause and then continue lower. And I would be waiting for this kind of action to start looking for the entry, because this is when you can see that the market is starting to become exhausted with the downward move. Yep. And always move your stop to break even? Mark wants to know, once you get to 1-to-1, is that like your typical trade management rule?
Yeah, typically once I'm at 1-to-1 or better, I usually like to cover my position. That way I've removed any risk, and if it comes back and takes me out, then at least then I'm not going to lose any capital. And if it doesn't, then basically I just leave my stop at that point until I get a complete move out of it.
Excellent, excellent. Okay, Jeremy wants to know if you can look at the 4-hour CAD.
4-hour CAD, the chart that didn't move. I noticed this today, actually. When everything else was moving like mad, the CAD and the Aussie were staying still.
Yeah.
So here's the 4-hour CAD. We do have a valid 3 at this point. We are well below the 20 line on the stochastic, and let me get rid of this. And we've definitely had our color change. Like right here, we had actually kind of an engulfing candle / color change as well. So this candle engulfed 1, 2, 3, three candles almost completely on the 4-hour chart. So that would be an excellent signal just in itself.
Yep, so there you go. So you can see exactly what's happened here is it's sort of made that little up move, but obviously it hasn't, as you say, it hasn't really gone very far, has it? It's in like a tight 50 pip range or something like that. Yeah. Yeah.
Yeah, it hasn't committed yet. That's exactly the way I look at it.
Exactly.
Exactly, 50 pip range. Yeah, and we saw the yen. If you notice the yen this week on the daily, we kind of saw the same thing. We had these 3 tiny little daily candles where the range was just so tight that we knew there was going to be a big break one way or the other, and so now this daily pattern is almost identical to the USD CAD 4-hour pattern, although we've got more of a range in here now than we do on the, these candles are a little different. But typically that to me is suggesting we found support and it's going to reverse. The exception, I guess, was we saw the Kiwi do that yesterday and it fell further.
That's great. Yeah, okay. That makes sense.
New Zealand. 4-hour, where's the 4-hour? Yeah, right here. We saw this consolidation in here yesterday. We had 4-hour candles in a row. This inside bar setup right here was a short continuation signal anyway, but then it went sideways for 8 more hours before it actually fell, and then came right back up. So.
Yep. That makes sense.
And we do have a valid signal there as well, by the way. So how's our Aussie doing? Let's have a look at our Aussie. Oh yeah, same as the Aussie, same setup.
Same exact setup. That's right. Yep. So yeah, right. So yeah. Aliko, yeah, the issue with this one is that you don't necessarily know that that's going to stick in the sand, that 3 is going to stay there. But we've talked about this. I think, there are ways to manage your trade. If you do like this system and you are going in on that third wave, you may get stopped out, but, eventually you're going to hook into it, aren't you? I mean, has that been your experience, Colin?
Yeah, absolutely. Yeah. That's one of the reasons that I think trading basically the higher the time frame you go, the more likely you are to see the reversal if you follow all the rules. Like with any indicator, basically, or even price action, the higher the time frame, the better the signal to begin with. So if you're going to trade lower time frames, you might expect to get stopped out a little more frequently until the trend actually does complete its move up or down. But when it does pan out, your reward is going to be much greater than your losses, and that's where the real advantage comes in.
Yep, I couldn't have said it better myself. That's exactly the way to think about that. Is that, yep, sure, you're going to get stopped out a lot in the lower time frames, but when you do get it right, you're going to get it really, really, really right. And so,
yeah,
that's right. That's right. Hey guys, thanks so much for spending time here. I really appreciate it. I know a lot of you haven't really been able, like in Europe or in North America, haven't had the best webinar times lately, so we wanted to have this one for you guys so that you had an opportunity to get in here. I know for those of you in Asia, it's not a good time, which is why you're probably not here. Although, no, we did have Mark, and Mark's in Japan. Mark's in Japan, so that's actually pretty good. But, yeah, so thanks so much, Colin, for sharing this with everyone. This is excellent stuff. If you want to get
you're very welcome.
indicator, you can get it if you're one of the first 10 at it was trifecta at theforexroom.com. Yeah, there it is right there.
Yep. It's on the screen now. Yeah.
Yep. If you like Colin's trades, you can follow his trades at theforexroom.com, or you can follow his trades along with my trades and Emmanuel's trades at the Daily Trader at FXJake. Also, I know for a lot of you, I haven't really been on top of videos because I had a kid this week, and my wife's getting in the hospital tomorrow, so I'm back in the saddle tomorrow, so I'll be posting videos for everyone like I normally have in the past. And sorry for being sort of out of the loop on your emails as well. I'll catch up on those this weekend. Thanks so much, guys, for spending time here. Thanks, Mark. Yeah, it must be my first kid. Exactly. You got that right, Mark. How much for a trifecta? Bill, it's free. Just email him. There's the email right there, so you can get it. Thanks a lot, Matt C., and thank you, Matt G., both of you. Yeah, thanks a lot, Denny. Thanks so much, Colin. I really appreciate it.
Thanks very much, Walter, for having me, and congratulations once again.
Yep, thanks a lot. Thanks, Joe. See you, Lewis, and we'll see you, Colin. Have a wonderful weekend.
Okay, you too. Take care, everybody.
Bye, guys.